Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market cipher. So it has been a few weeks since the last video. We have got a bit to talk about. Again, apologize for the delay in putting out videos. So let's get straight into it. Bitcoin has just opened a new monthly candle. We are on the monthly chart here, and we did look at this in the previous video. What we've got pulled up here is the Stochastic RSI, and we're looking at all of the bull cycles here over Bitcoin's history. And what we notice is once we do cross above this 20 level here, basically above this red zone, it does confirm that the bottom is in and the next bull market is starting. And we see this with all three previous cycles here. I've just got this white line marking where the blue line here first closes above this 20 level on the stochastic RSI. So if we just look at our current price action now, what we can see on the stochastic RSI is that previous monthly close did close above that 20 level, only just at around a 22 reading. So we did confirm that close above the 20 level. And again, on all previous bull markets here, once we got that close above the 20 level, it did confirm the bottom was in and the next bull run was starting. I do also just have these trend lines drawn in, just connecting the highest points in the bear market. And we see also when we do close above that trend line on each of these bear markets, it does start the next bull market also. But breaking this trend line along with the monthly stochastic RSI above 20 is that extra confirmation that the bottom is in and we're starting the next bull run. And down to the 2-week time frame now, we also opened a new 2-week candle at the start of this week. We have been keeping an eye on this chart, looking at the RSI, and we notice that whenever we break above this white zone on the RSI, which is above a 47 level, and we close above it, this also is a confirmation that the next bull run is starting. I've just got it marked with the white lines where we did close below into that red zone, and then when we did close back above into that green zone. And we see on each of these cycles, once we did close above that 47 level on the RSI and in this green zone, it did initiate the start of the next bull run. And with our current price action here, we can see that we did close in that green zone on the 16th of January. We came back down into the red, and with the previous 2-week close, we have closed back in the green zone. So that is a good sign and another confirmation that the bottom is in. Doesn't mean we can't have another pullback here, but I don't think we'll make another low. And I think the lowest we'll go would be around 19K. So I am on the log scale here rather than the regular scale. And we are looking at this trend line here connecting the overall highs. And I've also got another trend line here just connecting these two lows. We can see we broke below it on that FTX capitulation and we came back above, closed back above it. I think if we do have a pullback, this may be an important line that we retest and we may get support from. And I've just drawn in this circle here where these two lines intersect, this orange dotted line and the overall trend line here connecting the highs. And if we also drew in a fib retracement level here, we do see the golden pocket does line up also with the intersection of these trend lines. And again, that's at around 19K, and the intersection would occur on the 27th of March. So this doesn't have to happen, but I think after a rally like this, Bitcoin is due for a pullback. But I do think this would be the lowest we go, and this would also be a retest of this trend line and would basically mean we came back to the lower regions here from these previous pullbacks. I do have this order block drawn in blue. These order blocks come from a single green candle in a downtrend or a single red candle in an uptrend. It's a break in the momentum. Time was spent here and therefore volume. And so these areas can become of interest later on, acting as support or resistance levels. So we can see it acted as resistance here. We managed to close back above it here on this 2-week candle where we pulled back. We did get support of this order block. We got a nice bounce back to the upside. And we can see if we did come back down to test this order block, we could possibly wick to this area here, but still close inside the order block. And then if we were able to get that bounce, close back above it, it would show that it did act as support, and I would expect higher prices. But we'll have to see how that plays out, and we can actually see that a bit better on the weekly chart. So going down to the weekly time frame now, if we just pull up the 50-week moving average and the 200-week moving average, we can see that we did get resistance here as we did try to push higher. It does look like we're getting rejected from those moving averages, and that's one of the reasons I think we are going to have a bit more of a pullback here before we try to break this 50-week and 200-week moving average back to the upside. And if we go back to the 2014-15 bear market here, we did see that we got rejected off that 50-week moving average, and it did cause us to have a pullback. This was quite a big pullback depending on the chart that you look at. Some of the exchanges didn't quite go as low, but it's key to close above this 50-week moving average to get confirmation that we are going to move higher. But with our current price action, we are seeing resistance there at the 50-week. So I do think we have a more decent pullback before continuing higher, but I don't think it's going to be as bad as the 2015 crash here. And this did happen quite quick. We can see that we ended up closing that week all the way back up and actually doing a fib retracement from the low to the high. We see the bodies of the candles here did get support from that golden pocket area. This was more of a flash crash event here. And just looking at the 2018-19 bear market now, we can see also we did get resistance at that 50-week moving average. We didn't have a pullback though. We did close above it, and that was the confirmation that we were going to go higher. So that's what we're looking at for confirmation for further upside on this move. But as long as we're below this 50-week moving average, I am expecting a pullback here. So we've got that same trend line. Again, we're on the log scale. We also have this trend line connecting these lows, same as the 2-week chart. And we've got that possible target here in that golden pocket area. We do also have some weekly order blocks down here. They come from all the way back in 2020 as we really took off on the bull run. We can also pull up the VPVR, the amount of volume traded at certain price levels. And just looking at this range here from June onwards, we do see the second biggest spike here in line with that golden pocket and this target. So that's why I think this will be the lowest that we go. I do think we'll get support off these trend lines, also the golden pocket and the spike on the VPVR where we did have this previous price action. And if we were to look at the overall VPVR here, including this previous price action, we do see the biggest spike here is also in line with that golden pocket area and this possible target. And there is some other fib confluence with this level. Obviously, we have this golden pocket here, and this high is pretty much the same as this high. If we did a fib retracement from this high to this low, obviously we'll still get that golden pocket area. But if we take the fib retracement from some of these other highs, what we see is firstly going from this high down to this low. What we see is the 0.5 fib with this green line here, and that's also in line with that golden pocket. And doing a fib retracement now from this high to the low, we see it gives us that 382 fib, which is in line with that 0.5 fib and also the golden pocket fib. So again, taking it from this high, which is also the same as this high, we get that golden pocket level. Taking it from this high down to the low, we get the 0.5 fib level. And taking it from this high down to the low, we get the 0.382 fib level. So we see 3 different fib levels, all pretty much exactly in line with each other. And that tells me this is an important level. And again, this lines up with this possible target here and the intersection of both of these trend lines and the spike here on the VPVR. So there is a lot of confluence with these points. And if this is to play out, this would happen around the 27th of March. And just looking at the RSI here, I do have a trend line drawn, just connecting the overall lows here. And if we were to pull back to this target, then I think we possibly come back to this trend line also and look for support off that trend line. The stochastic RSI is still in this bullish control zone, which is above this 80 level. I think if we start to close below this 80 level, it would give that extra reinforcement that perhaps we are going to have this pullback. But that's something to watch over the coming weeks. And going down to the daily time frame now, and just zooming into the more immediate price action, I am on the regular scale for the time being. But what I've got drawn in is this parallel channel here. We had this run up. We've been consolidating here. But we can see joining the two lows here. And at this point, we get this parallel channel. We did go slightly above with some of these wicks. It does seem relevant as the midline of the channel seemed to act as support here, also here. And now currently it seems to be acting as resistance. But if we were to look at the measured move, if we did break this channel, what we do is take the width of the channel and put it at the breakout point, and we could break up, we could break down. I think it's more likely that we break down from this channel, and if we were to do that, it would have a measured move down here to 19.5k, which is around that golden pocket area we spoke about. And if I just switch to the log scale now, we could see those trend lines that we were watching. We saw that intersection point with the golden pocket and those other fibs. And we also see the measured move of breaking this channel to the downside is pretty much in that range, about $500 off that target. So it is another point of confluence. And again, we'd have to close below this channel to confirm a breakdown. So what other reasons do I think we're more likely to break down from this channel? If we pull up the RSI, we have been building up this bearish divergence here. We see successive lower highs on the RSI while making higher highs on the price. So there has been bearish divergence being built up here. We do see the stochastic RSIs pretty much come down and reset here. So perhaps it might come up one more time. Perhaps we come up to the top of this channel one more time before coming down. But I do think it's more likely that we break down from this channel, especially after such a big move to the upside. And if we pull up the daily EMA ribbon, we can also see it's currently acting as support and we are bouncing from it. And if we are to eventually close below this ribbon, that would be similar to breaking this channel, and I would expect further downside. If we are able to get above this midline and close above it on the daily time frame, would show also that this ribbon has acted as support. So perhaps we come up one more time, build another point of bearish divergence before coming back down and having that bigger correction. And just like on the other time frames, we see that VPVR does have that big spike around this target we've been talking about, which is again around 19k to 19.5k. And if we just pull up some moving averages now, we have that 50-day moving average in yellow, the 200-day in red. And we did get that golden cross back here on the 6th of February. But I'm showing these moving averages because on the futures chart, we haven't actually had this golden cross yet. So we'll look at that now. So this is the CME Bitcoin futures chart. We are on the log scale again. Again, that trend line connecting the overall highs. We don't have the same trend line connecting the lows here because the futures chart did actually do something different. Remember, it didn't drop as low on this pullback as a lot of that drop happened on the weekend when the futures was closed. So it does look a bit different and we can draw some different patterns here. I have drawn in this possible parallel channel here, and we do see if we connect the two lows here that these highs line up, also lines up with this point here. But what I'm looking at here is we do have this CME gap that never got filled. These gaps do get filled a high percentage of the time, and that's one of the other reasons I think we are going to have more of a pullback to at least fill this CME gap, which goes down to 20k. And this would be a 21% correction from the high here. Again, we have that golden pocket. On the spot price chart for Bitcoin, we said that the intersection of those lines and the golden pocket was around 27th of March, which would be here. But we can see with this trend line connecting the overall lows that it's at a similar time around the 3rd of April where we see an intersection of these lines. And again, we also have that bearish divergence on the futures chart. But if we just look back in history here at the previous bear market and the start of the next bull market, going back to 2018-19 here, what we saw is we reached the bottom of the bear market. We started to rally from the lows, and we did make this futures gap here, similar to our current price action. And although this doesn't look like much, after this rally, we had this quick pullback. This was actually a 25% pullback here, and we filled that gap, and then we did continue higher. So these gaps do get filled, and it's something to keep an eye on, and it's one of the main reasons I think we are going to have a pullback at least to 20k. And again, looking at our current price action, this would be a 21% pullback. If we came all the way back to the golden pocket, this would be about a 25% pullback, just like the previous cycle where we came to fill that gap. And we talked about that golden cross on the spot price chart with the 50-day moving average crossing above the 200-day moving average. And if we pull these up on the Bitcoin futures chart, as mentioned, it is different. We haven't had that golden cross yet. These averages are sitting at around 21k. And another reason I'm showing this, if we go back to 2018-19 again, what we see is a similar setup. This was the bottom of the bear market. We started rallying. We made that CME gap here. We went a bit higher. Then we had that golden cross. And we basically had this pullback when the golden cross happened. And as mentioned in previous videos, sometimes these golden crosses can attract the price. If we are well above it, we don't come into that golden cross. If we're a bit closer, sometimes we have a quick drop into that golden cross. But we can see a similar setup. We had that gap. We didn't have the golden cross yet. And then once we got that golden cross, we had this 25% correction pretty much over a 2-day period here. We filled that gap, quickly got bought back up, and we carried on higher. So just to show you that again, we haven't had that golden cross yet. We made that gap. We've gone a bit higher. Maybe when we get this golden cross, which could be possibly early next week, perhaps we get a quick flash crash into that golden cross and fill that gap before getting bought back up and continuing higher. But just a theory, we'll have to see how this plays out. And if we look at the VPVR for the futures chart, we see the bigger spike here, also in line with that target that we're looking at. So again, some confluence on the futures chart with these levels we spoke about. So now I want to compare the previous cycle here, the 2014-15 bear market and start of the next bull market, with our current cycle's bear market and possible start of the next bull market. So this is the current cycle here. This is the entire bear market. And we can see we have gotten above that trend line. And this is the 2014-15 bear market here. Also added in that same trend line connecting the overall highs. And we're going to be mainly looking at this section here where the white box is on both of these charts. So I've just zoomed into both of those. Just got this white box marking out the range from the low here of the bear market to the high as we were consolidating. We did go slightly lower here, but depends on what chart you look at. Some of them didn't go that low, and this was the low in the bear market. And I've done the same thing with our current cycle from this low to the high. We did deviate from that and close below it, but we did come back into this range and we did touch the similar high, just like in 2015 here. So it does look like a similar consolidation, only we had that FTX collapse here and it did push us below. But I think these are still comparable. And I've just got these white lines drawn in here. We can see they line up on both charts. Basically, this is indicating on a market cipher here, where we did get these red dots and these pullbacks in this consolidation. And we are on the 3-day chart for both of these. But we do see something similar here. We had a red, then a green, then a red dot. And we have done a similar thing here with this red, green, and red dot. These bottoming dots aren't similar, but we do see the top dots are quite similar on both charts here. We did see after we got this second red dot that we eventually had that correction. And then after we got the next green dot on the 3-day time frame, the bull market started. I think we could see a similar thing where we come down here. And again, I don't think we're going to have as big of a correction as 2014-15 bear market here. Again, I'm looking to come to this trend line and this golden pocket around 19k at the lowest. But what we can see is pulling up that golden pocket on both charts. We can see in the 2014-15 bear market here that we didn't actually close any of these candle bodies below this golden pocket. So I think it's a good target here. We can also pull up the 50-day moving average and the 200-day moving average. Again, I'm on the 3-day time frame, so I've altered these numbers so it is correct. We can see the 50-day moving average in yellow, 200-day moving average in red, pulling it up on the 2014-15 bear market. We see a similar thing. We can see we broke above the 50-day moving average here, and we spent time above the 200-day and the 50-day moving average. We got that golden cross consolidated at the top, and then once we broke below that 50-day moving average, we had a bigger correction. Obviously, this was quite a big crash, but we can see we're currently above that 50-day moving average, which is sitting at 22.6. If we were to do a similar thing, perhaps we come down and break these moving averages, come down to that golden pocket like I mentioned, before getting a bounce and starting the bull run. We'll have to see how that plays out. These red dots are lining up quite well in both of these cycles. And if this were to play out, I think we're going to see that over the coming weeks here, possibly going into the end of the month where we do complete that pullback before getting support and starting the next bull run. But going to the 4-day chart now for Bitcoin, this is something that we've looked at before. We have a market cipher pulled up below. This is the money flow indicator here. And what we noticed is we spend a lot of time in the red in the bear markets. Once we flip into the green money flow, the next bull market starts. We saw that on the previous cycle as well. Spent a lot of time in the red money flow. Once we flipped into the green, the bull market started. And with our current price action, we have already flipped into the green. Another confirmation that the bottom is in. But what's different here is, as mentioned, we are in the green money flow. If we look at 2014 to 15 bear market, which we were watching, that final correction we had here, we were actually still in the red money flow. Well, with our current cycle, we are in the green money flow. That's why I think we won't have as big of a pullback as we did in the 2014-15 bear market. Another thing to note is on that other chart, we saw we made equal lows on this second pullback, but as mentioned, not all charts were the same. This is the Bitstamp chart, and we saw we made a much higher low here. So the pullback wasn't as bad. And if we actually do a fib retracement here from the low to the high, we saw that we did pull back to the golden pocket, got support, and continued the bull run. So that also goes with our argument that we do think we are going to pull back to this golden pocket with our current cycle. We had that confluence with the intersection of the trend lines, the fib level, the VPVR support, the other fib levels, taking it from this high. So if we were to do a similar thing on this pullback, come back to that golden pocket, again around 19K, it would still be similar to that 2014-15 bear market. It would be an equal low to this low, even though we did make a lower low here due to the FTX collapse. But this is something that I think could play out here over the coming weeks. Again, the target here would be towards the end of the month, around the 27th of March. And if we did pull back to this level, I would be adding to my long position, which I did get in around 16.8K, and I've been taking profits all along the way. I am still holding a decent amount in that trade, and I'm happy to hold it down to here and add to that trade at this level. And I think that would be a great long-term trade for the next bull run. I think that's about all. Hope you enjoyed that analysis on Bitcoin Mamo. I'll see you next time. Bye.